Hi, Clayton Gits here with the Gits Group and Keller Williams Realty, and this is your March 2014 market update. So the big news out so far this year is the Fed is continuing to taper their bonds and mortgage-backed security purchasing program, which is leading to an increase in interest rates. So as you can see from the attached chart, mortgage rates have already risen significantly since the Fed initially started their tapering. In fact, mortgage rates are expected to increase significantly above 5% for the first time since January of 2010. So essentially, this equates to over a $400 difference in monthly mortgage payments when comparing interest rates from 2013, January of 2013, to expected interest rates in the early part of 2015. So the other big news impacting our local real estate market is inventory. So low inventory coupled with really healthy demand is leading to increased prices significantly for the first time since the housing recession began. In fact, a recent survey from LendingTree is showing that sellers are going to take advantage of this market in 2014. 71% of sellers surveyed by LendingTree stated that they were considering selling this year because of what's happening in the market. Now, existing home sales and pending home sales, as you can see, fell sharply in December. Now, this can, again, be directly attributed to the lack of inventory in the marketplace. Now, it's important to note that this lack of inventory was most dramatic in the West. Sales actually increased in the Northeast and the Southeast. They were relatively flat in the Midwest, and they were way down in the West due to the extreme lack of inventory. Now we're beginning to see some of those signs of low inventory here in our market, and again, that is pushing prices up significantly for the first time in many years. So home prices are increasing dramatically. In fact, they've as of spring of last year, the spring and early summer of 2013, home prices began to increase dramatically, and it had everything to do with that lack of inventory that I've been talking about. Now, as we move through 2013, the Federal Reserve made their first announcement to taper their bond purchasing program. They were considering tapering their bond purchasing program. And interest rates, just on the announcement of that information, interest rates spiked and the market began to level off. So you can see as interest rates move up or down, they're directly tied to how the market perceives whether or not it's a good time to buy or not. Okay, so this chart is always one of my favorite charts to present. As you can see, real estate is still one of the best investments. It actually is the best traditional investment. If you go all the way back to the beginning of the century, real estate still outpaced the Dow, which, as we all know, has seen new all-time highs. So the moral to this story is it's a really good time to invest in real estate. In fact, there's really not been a better time to sell a home since before the real estate crash in 2007. With interest rates still at historically low levels, a lack of inventory, and very healthy demand, it's a perfect time to consider selling your home. It's also a good time to consider buying a home because of the historically low interest rates. Thanks so much for watching this month's market update. If you or anyone else that you may know is thinking about buying or selling a home, please have them give us a call at 545-6648. That's 545-6648. Thanks so much.